Welcome to the FNO InsureTech podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Lee Boyd and Rob Beller.
Hey, everybody. That's right. It's us again.
Hi, everybody.
It's the FNO InsureTech duo.
Yeah, it's us.
We're a duo, even though there's really four of us that work on this.
Quadro.
Should we take a minute and talk about the other two people who work on the podcast with us?
Sure.
I don't think so. No.
Okay.
I don't want to talk about them.
They shall not be named.
I do want to talk about something that was interesting that happened this week.
What's that,
real
Rob?
quick? So this week I was at the Connected Claims Conference in Chicago, Illinois at McCormick Place. And let me tell you something. If you've never been to McCormick Place, it is a convention center that's like so big you can't believe it. It took from my room to the convention center, it took 10 minutes to walk to where it was.
That's like half a mile.
Mostly in the convention center. Yeah. I mean, every day I had like 14,000 steps. It was great.
That's good for you. Healthy.
Yeah. And look at me today.
What am I supposed to say to that? You are so good.
So good.
So good.
Anyways, I was there and I was there with Jeff Schmidt and Janine Davis.
I know them.
And we had a wonderful, terrific conference. But I had like, I'm going to just say 10 different interactions with people who have been on the podcast or people who listen to the podcast, people who walked up to me and said, you know what? I listened to your podcast and I really enjoy it. And I look forward to it. And I listen to it every week. And it was really exciting because, you and I, we do this, every week.
Yeah.
And we forget that because we've always kind of done it for you and me.
Normally it's just for you and me, but we find that people are using it for them.
Right.
To research different companies. We find that people are using the podcast to research individuals before they go out and have meetings. Investors are using the podcast to figure out who they want to invest in. There's a lot of research that's done with the podcast.
Yes.
Now, how cool is that? How cool.
We go on it every week and we're thinking, what can you and I learn?
Yeah. What can this do for me?
But there's actually some strange, weird people who listen to it and use it and find value in it. And that was really exciting.
That's fun. There's nothing more fun than somebody walking up to you and saying, hey, I listened to your podcast. It's okay. Good job.
I had one person, I won't say their name, who was a guest. And she said, I want to thank you for having me. And she's this important person in our industry. She said, I want to thank you for having me on the podcast. I want you to know that being on the podcast has changed the trajectory of my career.
That's a big statement.
And I was bowled over by that. I mean, that was so wonderful. So
that's a big statement. That's neat. That's really
cool.
And
we were asked to be at the CoreLogic conference in January in Los Angeles, where there will be nearly just short of 1,000 people attending that very important conference. Of course, we'll be at Exactware. And so welcome to being a member of our little community. And we're thrilled you're here. And we want you to be a part. We want not just as a listener, but come on the podcast. If you have something to talk about or something to say, do it here and weigh in, and we'd love to have you. And speaking of which, that is a great lead into our guest today, Jim Dwane, the CEO at Bolt.
Yeah, we get to talk to Jim. Jim is a great interview. He is somebody who's really interesting to talk to, an insurance guy who made the switch over to the technology side and is really leading Bolt into the next evolution. And we're going to dive in. This is the second time Bolt has been on, first time that Jim's been on, but we're going to get to
Right.
talk all about the marketplace, a little bit about embedded insurance, and it's going to be a great time.
A leader, enormous success in the InsureTech world, a unicorn company. Here on FNO InsureTech, another week of an important guest.
Big people, big people.
And so instead of listening to us pat ourselves on the back, do you hear that?
We do so good. We do so good. Oh, I wish.
That's me patting myself on my back.
It sounded really painful.
Let's get to our interview with Jim Dwane, CEO at Bolt. Hey, everybody. We are here with our very special guest. This is Jim Dwane, the CEO of Bolt. Welcome to our podcast.
Thanks, guys. Appreciate it. Happy to be here.
Glad you're here.
Glad you're here. Where do you join us from today?
I joined from Alpharetta, Georgia, which is a northern suburb of Atlanta. It's actually, I technically don't live in Alpharetta, but no one's heard of the town I live in. I'm in the town next door. So I just say Alpharetta because most people outside of Georgia, it's the one town they know in Georgia.
How about to say, I know that town.
I do too.
So everybody else. Yeah, I'm actually in Milton, Georgia.
Milton.
But that's to say that you're in an office.
I can go to an office. I'm talking to you from my home, though, my home office.
Okay, cool.
The new office, yes. It's a very lovely office, by the way.
Yeah, it's my wife's taste.
It's nice.
For those of us who might not be familiar with your company, what is Bolt? What do you guys do? And tell us a little bit about what you do there.
We are the largest technology-enabled P&C insurance exchange in the world. In plain English, we basically match buyers and sellers, right? So we facilitate insurance distribution, and we do it in a multitude of ways that we'll talk about over the next 45 minutes or so. And really, there's four basic ways that companies or individuals can participate in the exchange. You can be a supplier. Those are the insurance carriers that are integrated into the exchange and thereby made available to the consumers of the exchange, which is the other three categories. The first category is retail. So if you're an independent agent that does not have sufficient carrier representation, you can subscribe to the exchange. You pay a small fee to subscribe to the exchange, and in return, you get a cool piece of technology that enables you to quote and issue insurance policies. And then you also get access to the carriers within the exchange. The second category is SaaS, right? So we help really any sized insurance company or insurance company, a broker, larger or medium-sized broker. If you were to line up our customers on the SaaS side and ask them why they license our technology, they're going to give you 100 reasons. But at the end of the day, those 100 reasons really always distill down to three things: diversification of distribution, ownership of the customer or CAC to LTV, and then process optimization and operational efficiency. And we can get into some stories about that in a little bit. And then the final way, and kind of one of the more exciting topics lately, is embedded insurance or partners, right? So we essentially give anyone really who has the capability and desire to sell insurance as part of some broader offering, we give them access to the exchange via API, and we allow folks to embed insurance into some other type of product or service journey.
So like into a checkout process.
Correct. Yep.
So like Keller Williams, is that one of the companies who would do that? I saw there was an announcement about Keller Williams.
It is indeed, yeah. We're proud to be partnered with Keller Williams, the largest real estate franchise company by agent count. It's a great story. You know, kind of my version of their story is they woke up several years ago as one of the premier real estate companies. And they said, we don't want to just sell houses. We want to be a home buying destination. So they set about building kind of this ecosystem of kind of the products and services that you might need if you're in the market to buy or sell a house. And as everyone knows, homeowners insurance is a part of that. So we we essentially give them access to the exchange via API. In addition to that, we actually do the placement on their behalf. We're a software company that has the ability to also, only for the customers that want and need it, we can actually do the placement for them. We think about it this way, and then I'll kind of stop. Digitization is I think about it on a spectrum or on a continuum. On one end of the continuum, you've got companies that are just beginning their digital journey, or just beginning kind of their journey into digital and insurance. On the other end of the spectrum, you've got people who are already digital native. We've got a team of people, regardless of where our customers drop in along that continuum, we essentially can catch them, kind of catch them where they are. And while using our technology, we give them as much human support as they need as they kind of work their way toward a more digital journey. So that's kind of the way we think about it.
That's wonderful. That's a great way to describe that.
It's interesting, the number of exchanges that are out there. I assume that, and I know that Bolt is a super prominent one. What's the problem that you guys solved in this space?
So what we first solved, quite frankly, was an opportunity, not a problem. I'll give you both sides of the story. I'll give you the opportunity side, and then I'll frame it as a problem if you'd like. But really the opportunity is, back in 2011, 2012, you might remember we all started seeing these television commercials that at the time seemed weird. And that was when these insurance companies started to advertise, not only will we provide you a quote from ourselves, Progressive, for instance, not only will we provide you a Progressive quote, but we're also going to provide you a quote from our competitors. And at the time,
I recall.
Are you crazy? Why would you do that?
What kind of gimmick is that?
It has since become ubiquitous, so we don't even think about it anymore. But we were the ones who helped Progressive capitalize on that opportunity back in 2012, right? So they said, we don't have an appetite to write everything, right? And we not only want to do auto, but we want to do homeowners and all of the other kind of adjacent lines that you might need as a homeowner. And we want to provide choice. The benefit is, one, there's a degree of risk arbitrage, right? They get to take the business onto the balance sheet that they want. And then the business that doesn't meet their underwriting appetite might meet the appetite for someone else, and they're able to place it with that someone else. So it's kind of a win-win-win, right? You've got Progressive wins because they own the customer, CAC to LTV. The rest of the market wins because it's another form of distribution. It's alternative distribution for some of these carriers that they're placing it with. So it's kind of a win-win-win. So we were actually helping them realize, I think, that opportunity, right? If you want to frame it as a problem, in theory, I suppose the problem is no insurance company can be all things to all people, and there's business that falls on the floor. And would love to solve the problem of monetizing that business that otherwise falls on the floor.
Well, I was just thinking about it from the perspective of being an agent or, a broker. And like you said, if you don't have the panel of carriers that you want or need, that it gives you expansive opportunities.
It does. Absolutely. It absolutely does. When you think about it with an exchange like ours, and I'm not going to get all techie on you, but we have the ability to allow an agent to connect to the exchange, then, directly connect to the carriers with whom they have their own appointments. But if the circumstance arises that the carriers they have appointments with don't have an appetite for a particular risk, we can give them immediate access to other markets that they're not appointed with, and we facilitate that transaction on their behalf. Again, we're insurance distribution technology, and we're always looking for ways.
What is your biggest push right now? Is it to work with other companies looking to offer services that they don't currently offer, or is it more on the independent agent and giving them a larger platform? What is your biggest initiative?
Our biggest opportunity, there's really two of them. Really, it falls into two. One of them is quite simply what I just described. It's folks that are looking to further monetize the customer base, improve lifetime value, right? So not only do we offer choice, right? So our whole model is predicated on choice, right? And we'll talk about this when we get into embedded insurance, but one of the strengths of our exchange is what we call our liquidity. And liquidity really is just a euphemism for the number of carriers, the number of lines of business, really the amount of choice that we offer. So those that are looking to leverage technology to provide more choice so they could improve the lifetime value of their customer base. That's kind of the first one. And generally, that falls into, insurance companies, brokers, agents, et cetera. And then the second one, like we talked about earlier with embedded insurance distribution, and this is my terminology. It's democratizing, meaning insurance continues to diversify away from the, previously rather narrow channels through which it was distributed, the corner insurance agent. Then, the internet came online and people tried to start selling it digitally and et cetera, et cetera. Now what's happening is you see this point of purchase insurance opportunity, right? That's what I mean by democratizing. So now you can buy insurance when you buy your house through Keller Williams. Now you can buy insurance when you buy a car. Now you can buy insurance when you secure a loan. There's all different types of, you can buy insurance if you happen to be shopping, you happen to be on a website that you're educating yourself about auto loans or home loans. There's opportunities to purchase insurance there. So it's democratizing. We help people capitalize on that opportunity.
I'm wondering if you ever get pushback from agents. I mean, you're making it so much easier for agents to have an option and to deliver, but yet you're also making it easier to become an agent and finding new ways to sell insurance. Do agents ever push back and love the product, but at the same time say, but stop selling it to other agents, only to me?
It's a great question, but not at all. As a matter of fact, I'm going to date myself, but I entered the insurance industry back in 1989.
Okay.
And back then, the number one challenge of agents and brokers was the cost-effective handling of personal lines and small commercial. And we thought we were going to solve the problem within 5 years. How many years later is it now? 33 years later?
Right.
Guess what the number one challenge of agents and brokers is? Cost effectively handling personal lines and small commercial. The challenge exists. We actually help people realize that. So, from our perspective, it almost becomes a necessary part of the agent ecosystem. Because we also, by the way, we integrate with agency management systems and CRM. So there's the kind of the beauty of put the information in once and it can be passed amongst the systems within the ecosystem. So there's a big efficiency play there.
Jim, I'd like to talk a little bit more about embedded insurance. I think that's such a fascinating place. We talked about the independent agent, right? Right now, if I need homeowners insurance, I would typically go down the street, I would talk to my independent agent, or I would talk to my captive agent, and they would place it. But there's new types of insurance. There's this embedded, and that's a place that Bolt plays in. So why don't you talk a little bit more? What are some other ways that Bolt is working in the embedded space?
So we actually view it almost like a 3-act play.
Okay.
Right. So where we actually focus, we started with Act 2. Act 1 is something that has become somewhat ubiquitous, which is really what we think about as the point of purchase, simple product, quick. It's almost like picking up a pack of gum at the grocery store checkout counter. So think about when you buy an airplane ticket and you get to the end of the ticket, and right when you're about to pay, it asks you if you'd like to protect this trip with, travel protection or trip cancellation insurance. That is what we consider to kind of be chapter 1, right? It's simple. It's point of purchase, no choice, right? They've made the decision for you in terms of who that carrier is going to be. And I would say from a maturity perspective, it's not fully mature, but that kind of portion of the embedded market is relatively mature, right? The second chapter, the second act of the play is choice, right? This is where you begin to move into more complex products, like you said, Lee, the homeowners insurance, the auto insurance, the small commercial insurance, where when you get into more complex products, people want to have more control over the decisions that are made. So rather than having someone else choose the carrier for you, we give you choice, right? And this is something where kind of both we do chapter 1 as well, but we do chapter 2 and we specialize because we've got such a large exchange with so many carriers and so much liquidity. But you get, 2, 3, 4, 5 options of insurance to choose from, right? So and we think, kind of where Act 3 of the play is moving is into services, right?
Okay.
Where you've got, not just the embedding of kind of risk indemnity products or, insurance products, but you start to move into the space of risk avoidance products and risk mitigation products in conjunction and bundled with your insurance product. So we kind of see it as an evolution. I'll say this though, in chapter 2, in act 2 of this play, I believe we're still nascent. I sat on a panel out at ITC and we talked a little bit about this on the panel. It was, there's still a lot of companies throwing spaghetti against the wall, meaning they're just plugging their API into as many places that they possibly can, hoping the traffic will come. I think what the industry, we've been really hyper-focused on focus, right? You really have to pick your spots, understand specific industries. Then you have to understand where the optimized, kind of where the optimal buying moment is to maximize your conversion. So there's a lot of kind of even non-technical science that goes into it, informed by data. So that's kind of where I think we are. I think it's still relatively nascent, but I think the winners of the embedded game are the ones that figure out focus, industry specialization, maximization of conversion.
And so in Act 3, you talked about being able to bolt on additional products. Give me an example. Open my mind a little bit. I guess right now I'm thinking, I log on, I'm going to buy this product, and I get homeowner insurance. Does the future also have me buying IoT devices or other services? Okay.
Imagine a day where, either adjacent to or as part of your homeowner's insurance bundle, you get water sensors.
Okay.
Right? Water is really one of the leading causes of loss for homeowners insurance policies. So in addition to your homeowner's policy, you also get IoT devices that monitor water leakage, right? So you can kind of get ahead and minimize, either eliminate or minimize the loss. That's an example of kind of where we see some of the services, risk mitigation and risk avoidance services coming in. That's a really good example.
I was just thinking too, this is such a great service. You make buying so easy, right? A lot of people, I think Rob has been looking for new insurance for 2 years on this podcast, and he just can never find the time to go talk to an agent and do whatever. And so you make it so simple. But I also know that it's important for people to stay with the same insurance company for a long time, right? You want to be able to have a insured, hopefully who doesn't have a claim, collect the premium. When they do have a claim, they pay it out. So it seems like a great thing, but also a negative at the same time, that we're making buying so easy. So what do you tell the clients? What do you tell the insurance companies when they say, hey, we want people for a long time. We don't want them shopping every year whenever it renews. What does that ever come up?
That's a great question. I mean, we see shopping as an inevitable reality.
It's going to happen
of consumerism, right? And as a digital partner of these carriers, our responsibility is to support them in any way possible to keep them as a customer. So the role we play, we don't really get involved in the claims process or the underwriting process or anything like that. We help them distribute efficiently. One of the things that's most important in purchasing insurance online is having a short, simple, easy to understand journey, right?
Yeah.
Isn't it better if you have to answer 7 questions instead of 17 questions or instead of 37 questions, right?
100%.
So if we can help them create this positive experience through better journey, easy to understand, facilitated selling, meaning, little pop-ups that say, what exactly is water damage? What is a deductible? That kind of thing. If we can kind of help them along that journey, we're doing our part to kind of help them keep their customers, keep their customer satisfaction high. That's kind of the way we think about that. But, we see shopping as an inevitable part of consumers, and particularly in different economic times, right? When economic times get tougher, people have a tendency to shop because they're looking to save money at every opportunity they can.
Well, and I guess I'm kind of even answering my own question in my head. I mean, you are the first glimpse into the insurance company. So as long as you can deliver a simple, streamlined selling process, I mean, you're setting the stage for a great relationship between the insured and the insurance company. And then the insurance company, like I've been with my insurance company for years and years, and I don't ever look for anybody else because it was easy to buy. So they hook me, and then they pay the claim when I have a claim. They service it. They're there for me. So all those things. So it's really your job, not so much to pay the claims. That's the insurance company. It's your job to set the stage to make it so simple and so easy. So I like that.
Yeah, we consider ourselves enablers, right? A lot of people, one of the buzzwords in technology broadly, not just insurance technology, is disruptor. We don't view ourselves as a disruptor. We actually don't have a desire to be a disruptor. We want to be an enabler, right? Mm-hmm. If I can actually enable someone else to be disruptive, that's a good day for me. Right? We just want to enable. We want to enable and facilitate the business that insurance companies get and the way that they, kind of help them treat their customers well. But then, just as importantly, is help people sell more effectively, more agent, the agents, the brokers, the carriers, et cetera, on the customer side of the exchange, help them create a more beautiful experience, I guess.
I love that. So we just went to Target Market, where it's a conference that's held twice a year. And at this market, you learn about all these programs that sell unique, fascinating insurances. Maybe it's hot air balloons. Maybe it's breweries or booksellers or all these things. Currently, you're mostly in the property casualty space. Is that right?
Correct. That is correct.
Is there a future where more of these niche products could come into this distribution channel?
There is, absolutely. We'll remain, kind of P&C and P&C adjacent. And I'll give you a specific example in just a second. But you bring up a super, super important point, and that is in product innovation, right? So at an accelerating rate, new risks are emerging, right? 10 years ago, there was no such thing as a gig economy, or at least there was no such thing as a mainstream gig economy. And then all of a sudden, these things exploded. Uber, Airbnb, you can get pool sharing and, scooters and all these types of things. So the rate with which new exposures are created is accelerating. So we get excited. We actually have Bolt here in the US actually has an MGA team, and we partner with our customers and partners within the exchange, those looking to solve some of those problems. So we solve them in partnership with some of our customers, some of these emerging risks. So, that's really, really exciting to us.
That is exciting. So right there, you were saying in the U.S., what do you do outside of the U.S.?
We're one of the largest embedded insurance organizations around, right?
Really?
Outside the United States, we kind of do the same thing outside the United States. Interestingly, though, outside the United States, we started in Act 1, and now we're moving toward Act 2. If you go back to the example I used before. So device protection has begun as our hero product outside the United States. So, the selling of your phone.
Right.
We do that. We're one of the largest providers of device protection insurance in Asia.
Wow, that's a big market.
It's a huge market. Yeah, absolutely. And now, they're beginning to develop some choice options as well. We started with choice, and now we've just launched actually a device protection business here in the United States. It's another product now available on the exchange. Wow. It kind of falls more into that Chapter 1, Act 1 of display, kind of simple point of purchase display. So we're one of the largest providers of that. So
that is really neat. I didn't realize that.
Yeah. We're in Bolt Tech, which is the name of our parent.
Okay, that was my question. So we have Bolt Tech, and then we have Bolt Inc. underneath it. Are there other companies underneath Bolt Tech?
So Bolt.
Bolt.
Bolt is simply the brand in the United States, but we operate completely independently from the international operation.
I see. So I'd like to go back to the MGA we're talking about. So you have the MGA, they can sell some of the niche, interesting insurances out there. What about just regular old homeowner insurance? Are there agents inside your operation who somebody could call and say, hey, sell this? What does the actual agency look like within Bolt?
It's there in service to primarily our embedded customers.
Okay.
Right. So particularly when you've got, like a mortgage provider or a real estate agent or, someone who happens to be in the automobile space or even in the small business space, not everyone has the resources or the ability to actually do placement. You have to be licensed. It's complicated. Right. It's so that organization, those people that I referred to are there available to those embedded customers to do the placement on their behalf.
I see. And so what does the future of distribution look like for insurance? Is this marketplace? Is this the future? What do you think?
I believe so, with a couple of caveats. So the first caveat is, kind of, I'll say by definition, but it's by definition Jim Dwane's opinion, that digitization only exists from a distribution perspective in a low touch, no touch environment.
Okay.
So you're going to see a continued, as I used the term earlier, democratization. You're going to continue to see an increased democratization in those low touch, no touch lines, right? As carriers continue to get more sophisticated in their underwriting, where they have to ask fewer questions and there's little or no human involvement, where you can achieve a fully digital experience. I think that's what we're going to continue to see. And I think that's going to be very, very significant over the next, 5+ years. So I think that's one. Like I said earlier, I think there's going to be an emerging, constantly emerging risk categories, new exposures that are going to need to be attended to that can be done low risk and no risk. So I think that's also exciting. And then I think, there's this phenomenon that I call a rush to the center, right? Okay. So the InsureTech space right now, from a capabilities perspective, is a messy one. So what do I mean by that? You've got policy management systems, you've got agency management systems, you've got CRMs, you've got rating engines, you've got exchanges and marketplaces, and I think what's happening is all of those things are beginning to coalesce around the agent desktop, right? Or around the consumer, as the case may be. So it'll be interesting to see how kind of the continued evolution of the integration of all of those various capabilities at the point of sale continues to happen. And I think that's also something that I think is going to be happening with insurance distribution.
I just think that there's so much growth there. There's so many opportunities. I think the future is bright. So Jim, let's talk a little bit about raising funds and about the health of the company. I believe here recently y'all had a announcement come out about some big news in that arena. Why don't you tell us a little bit about that?
Yeah, no, super, super exciting. Thanks for asking. Yeah, on kind of Sunday, Monday, we announced a Series B fundraise led by Tokyo Fire and Marine.
Wonderful.
And further supported from some of our Series A investors. Super, super excited about the strategic nature of Tokyo's lead position. It was an up round. So it was a valuation of about $1.5 billion.
That's unbelievable.
Which was an up round, difficult to do in this market.
Oh, it's unbelievable. Yeah.
Yeah. So, I mean, listen, we, not very simply, we think it's a validation of our business model, of our kind of long-term prospects, of kind of the durability of our, road to profitability. That's also important these days. Right. And having the type of endorsement from the market like that in this type of a market is really phenomenal. So we're excited. We're excited about where that can bring us, and having a partner like Tokyo Marine enables us to do so much more in terms of innovation and problem solving, and kind of bringing that insurance expertise and problem solving to the table is just fact. So we're kind of humbled, but super happy with it.
I think it's so great. I mean, in this environment that we're in, to hear about funds being raised and valuations like that, and it just speaks volumes for your company, right? People saw value, true value in there, and they're investing. I think that's wonderful. I think that really speaks very highly of Bolt.
No, appreciate that. Yeah, we're real happy and just very, very excited. So,
well, that's great to hear.
Now it's back to work.
Now it's back to work. You gotta work even harder now, right?
Exactly.
I do want to go back and also talk about you real quick. I would be remiss if we didn't let our listeners know that you are an insurance guy, because
Absolutely.
we interview people a lot of times who are sitting where you are and they're not insurance people. And I think we all can agree it's very, very important for our InsureTechs to have insurance people in the walls of the company.
Absolutely.
So just give us a little bit of your background. Tell us, you said that you've been in the insurance space for, I think it was 38 years or so.
33 years, yeah.
33 years. Tell us a little bit about you, kind of where you started here in the insurance space up to today.
Yeah, I started in 1989 right out of college as an underwriter.
Oh, okay.
For a company called Aetna Casualty and Surety, which later became Travelers, right? So when I tell people where I started, I say I worked for really two large carriers, AIG, 20 years, and then prior to that, about 8 years with Travelers. So I started in underwriting. I would say if you were to break my insurance, so kind of the first 25, 26, 27 years of my career, I really focused or was involved in 4 different types of things. I was an underwriter, so I grew up with that technical underwriting DNA.
Mm-hmm.
I did a whole bunch of sales, marketing, distribution. So that's kind of where you understand how insurance distribution works. And then I did, what I call kind of general management. So I was very blessed to have been able to run several businesses for AIG. I ran Latin America and the Caribbean. I ran the Southeastern US. I ran one of their auto companies. I ran their North American sales and marketing distribution organization. So I was very fortunate. And then the fourth category that I was involved in, which has served me well in technology, which was transformation, a bunch of transformation and things like that. So that was a whole lot of fun. But I left the insurance carrier world back in 2016, and I really jumped into tech. Bolt's actually my second technology company. Okay. I jumped into tech in 2017. Like everybody else who does it, kind of fell in love with it.
Yeah.
And getting back to your point, which of course I just passionately agree with, which is we believe in having insurance people talking to people buying insurance software.
Well, Jim, we're here at the end. Really apprecited the time that we got to visit today. You have a fascinating story. We want to get you back on and talk again and see how things are going.
Awesome. Thanks a lot, Larry. I appreciate the time. Had a great time.
You bet. Thank you.
You kind of lost me in the middle there.
Yeah.
Sorry.
It's almost like you just stopped asking questions.
Well, that's because I did.
You did.
It wasn't like I did it. It was I did it.
Do we need to tell the audience what happened?
It's a little embarrassing.
Well, it should. I mean, it is embarrassing.
Would you call it a typical Rob Beller story?
I don't know if it'd be typical, but I don't
surprising.
know.
Not surprising.
Not surprising. It might be the second time you've almost lost something at the airport.
So right? I was in, where was I?
You were in
Phoenix. I was in Phoenix. I had a video call that I had to be on in between flights, and it was super busy. So I went into one of the airline lounges so that I could take the call in a little bit quieter of an environment. And I took the call, had the call, so it was like 45 minutes, packed my stuff up and left with everything but my computer charger.
Yeah.
Came home, no computer charger, none. My wife also has a Mac, but her version is older, so different chargers. I didn't know what to do. So Lee said to me, "Don't worry about it. You have plenty of battery."
Yeah, you had a half a battery, 50%.
I had half a battery, and guess what?
It
You were
sucked
wrong.
dry. I
You
was
were
very
wrong.
wrong.
Uh-huh.
Well, but you
So-
were missed. You were missed. It was a delightful conversation. Very
Was
much
it?
appreciate
Was it?
Jim being
I'll have to
on.
listen to the podcast.
You will. You will. Just like, I always go back and I listen to them each at least 2 times.
They're info rich.
Info rich. Jim was a delight, and I appreciate him and the team for being on and visiting with us.
Go on, bring it home.
Oh, I think it's home. You normally end it. You normally say, like, let's thank our crew.
Go on. And why don't you bring it home? Let me say it. Let me say it this week.
Well, and with that, we'll bring it to a close. We want to say thank you to our delightful people who help us, Alicia and Al. Couldn't do it without you. Nothing would get done without you. And we'll leave you with.
Bye, everybody.